keep our risk super low if we do get it wrong, but if we get it right, we can really increase our potential profit and return. So here's one we did not too long ago. This was on SPY, and this was it was on the 6th. It was trading at 573.80. Now we were targeting then. We were doing this target trade, and we were looking for a move to 560, I believe, was our target. So we did this trade. So somebody asked, what, are these easy to understand? So here's one that we did. This was sent out to members. So here it says when it's a new trade, I'll say new, and it says new SPY pending trade. Okay, that means we're going to look for this trade to go out at a certain strike at expiration. That's what we're shooting for. And so it says trading at around 573.80. So, I send this out. I can't say exactly where it might be a little bit different by the time it gets out. But we use a service called Telegram. So it goes out within seconds. And it's a free service. So it says here, binary put option butterfly setup. So it says buy one butterfly. Okay, so it says buy one butterfly. This is what it looks like on Thinkorswim. 10 March, that's the year 2025. So you're buying the 565, 560, 555 put butterfly. So you're long the 565 put, short the 560, short the 560, long the 555. That's how it's defined by when it's sent out, in your order. So it said do this around $40 or lower, 40 cents. That'd be 40 bucks. So the debit paid will be your risk. All right. So that's tells you exactly what you're doing there. Now here it was. That was on the 6th. Here it was, and I'm constantly updating these if there's something that needs to be done, adjustments, or if you need to take profit or something comes up, I'll send out an alert to that. So here it is on the 10th. It say SPY short pending trade. Trade expires today. Okay, it's now trading around 567.63. So we got in there. So it says if long that 10 March put butterfly there. Look to take some profit today on any move lower towards 560. And then here it is later in the day, short pending butterfly, now trading at 561. So it's going right to our target. If long that butterfly, make sure you take profit today, close trade out prior to the close. All right, so that's how descriptive these are when I send out. So here was the butterfly. We set it up here. And we were targeting that down to that 560. So right there, my indicators are down. So this was just a great setup. So we did this, and I look at option activity. They're really key as well. So this was the 10 March, this year. You can see the option expiration here. So 565, 566, 555. So here's the spread. Long the 565, short the 560, short the 560. Long that. So put butterfly right there. Total cost, total at risk, 39 cents. Okay, spread width, $5 between the strikes, so $500. Cost of the trade, 39. Potential return would be $461, or that's 1,183% return. So that's what would be if you get there, but and there's still a great return. Now this one almost pinned to the penny. So here it was. Again, this was alert trade sent out to members. So here it was, went from 573. Then on the expiration day, now it was trading pretty close to where we were shooting for. It was at 560.32. So our butterfly target was 560. All right, so here's our long put butterfly. And this one we just did, we didn't leg into this. Okay, so this was pretty much nailed it. So we went from 39 bucks to 456, so up $417 per one spread, 1,069% return in that 4-day period. So that was really, really cool. So that was one penny trade to show you that was what we call a lotto ticket trade. Sent out to members. Here's another really unbelievable one.